Hello, I'm Chris Pedersen, and this is Stock Watch on Wednesday, the 23rd of October, 2024. All information is general advice and may not be suitable for you. Always consult your financial advisor before making any investments. All questions from viewers should be sent to stockwatch@fnn.com.au. Some of my market observations. First off, the ASX 200 has been down. It's at 8,205. Well, let's put this in perspective. It's still over 8,000. It's 2.5% above 8,000. That's pretty good because many people didn't think it would get this high. The US market is flat last night. I expect us to be pretty flat also. The Australian 10-year government bond interest rate now is 4.409. This is up dramatically. Just a month ago or so, it was around 4%, a little less than 4%. Thus, if you're a bond trader and you've been holding long-dated bonds, you'd be getting hurt. However, if you're short them, well, then obviously you'd be making a lot of money. I do not expect the RBA to cut rates unless major changes happen in current circumstances. Clean energy shares versus the oil sector. Now, this is a depressing chart in a way. The black line on top is oil stocks. The green line at the bottom is clean energy companies. Obviously, they're not making money like the old fossil fuel companies. U.S. debt to GDP projections. Now, don't get tied up in the actual numbers. Look at the trend. The red line is if Trump is elected. The next line down is if Harris is elected. And the bottom line is if the U.S. government maintains the current level of legislation. All three are bad. Nobody's talking about the size of the U.S. debt getting out of control. Here's an interesting chart. It shows container rates and key routes. What you see is the big jump up. That's during COVID. Then it comes back down naturally. Spiked up a little bit. Now it's coming back down. This is positive for global trade, positive for inflation rates. This is an interesting chart. This is in Sydney prices for 3-bedroom units versus 2-bedroom units. The price premium. It has blown out recently. If you have a 3-bedroom unit, that's great. If you're 2 or 1, well, they're going up in price, but nothing like the demand for 3 bedrooms. This chart is U.S. payroll jobs that have been added over the past few months. Now, I talk a lot about don't look at individual monthly numbers. There's a lot of noise. Look at the trend. This shows you what the trend is in U.S. jobs being added. It is up. That's very positive. The U.S. economy is strong. The Australian economy is strong. This is why the Australian RBA is not going to be lowering rates because our economy remains strong and there's no need to cut rates. Here is Dubai financial jobs. Well, past year they added 5,000. In Dubai, they're trying to grow their financial markets and they're incentivizing Westerners to go there and try to improve their knowledge base. It's working. Today I have 3 companies. The first one is AMP. The code on the ASX is AMP and it closed around $1.44. I've followed this company for quite some time. It's had a very checkered past. It's not that long ago that it was trading around $20. And then they denied Westpac the chance to take them over at a pretty big premium. It has now been plummeting, but it looks like it has bottomed and is rallying back. Take a look at the far right of the chart. You see that it truly is in an uptrend. Well, they've stabilized the company. Let's take a look at the numbers for going forward though. First off, these are estimates from Macquarie. AMP now has a market cap of $4 billion. Price target by Macquarie is $1.34. However, my view is different, but let's look at the numbers anyway. The revenue growth from 2024 to 2026 is basically flat. It's negative 0.6% per annum. The truth is, it's hard to project what their revenue growth will be right now. The EPS growth from 2025 to 2026 is 3.6%. I'm not going back to 2024 because the earnings per share is low. That would give you a distortedly big earnings growth rate. Dividend growth, same thing. 2025 to 2026, well, that's positive 6%. That's good. Shareholder equity growth is only 3%. The PE on the 2026 earnings estimate from Macquarie of 8.9 cents is 16 times. The yield on the 26 dividend estimate of 4.5 cents is 3.1%. These are all okay numbers. The net tangible assets is $1.36. The cost to income ratio is 53%. That's a pretty good profit margin they now have. They have gotten their costs under control. Their payout ratio moving forward is going to be just under 50%. That is also good. They have a over 3% yield, and they're only paying out half their earnings. AMP, as I mentioned, has stabilized. Since I last took a look at them and rated them was 23rd of August 2023, price was $1.22. I liked it then as a buy. I still like it as a buy. It is up 19.7%, including dividends. Now, the reason I like them is because it's a turnaround. It has blue sky in front of them. I think the analyst expectations are a little bit on the low side. Next company is BHP Group. BHP is around $42.20. It's been higher. It's been in the 50s, and it's traded off. That's because iron ore traded off. Copper price is strong. Iron ore is back up. It was down around $90 US a ton. Now it's over $100 a ton. Long-term projections for iron ore is that it will remain above $100 a ton. That means forward-looking estimates can be based more on current levels and growth rates and not trying to guess where the base material price will be in 3 or 4 years. These estimates are from Barrenjoey. They happen to have very good analysts in the resource sector. The market cap is over $200 billion. Their 12-month price target is $45. The revenue growth rate from 2024 to 2027 is negative 2%. So it's flatlining. Their earnings per share growth in this period is negative 8%. The dividend growth rate is positive at 2.4%. This is an important part of BHP and its value. The shareholder equity growth rate, which is why I like BHP, is estimated to be over 10% per annum. The PE on the 2026 earnings estimate by Barrenjoey of $4.47 is 9.4 times. So this is a little bit on the low side. The yield on the 2026 dividend estimate of $2.45 is 5.8%. They have amazing free cash flow at around 7.7%. That's averaging each of the next 3 years together. The payout ratio is just over 50%. BHP is the world's largest diversified miner of iron ore, copper, and metallurgical coal. As I said, if iron ore stays above $100 a ton, it will continue to be profitable with a growth in shareholder equity. It has a good yield. I rate it a buy. I don't rate it a full buy. I say half weight. Last company today is Flight Centre, code FLT. It's trading around $17 on the ASX. It had a horrendous announcement last week. The stock was over 21 and has sold off. This is what made me want to take a look at it. Is it sold off too much, or is it justified? These estimates are from Macquarie. The market cap is $3.8 billion now, using $17 stock price. Macquarie has a 12-month price target of $23.34. Their revenue growth in each of the next 3 years is 4% per annum. This is adjusted downwards. Their earnings growth from 2025 to 2027 is 10% per annum, and the dividend growth is 24% per annum. These are solid numbers. Their shareholder equity growth rate is 16%. This is a company I like on the surface, but let's look at the ratios. The PE on the 2026 earnings estimate of $1.44 is only 11.8. That's good. The yield on the 2026 dividend estimate of 71.8 cents is 4.2%. This is attractive also. Its free cash flow is amazing at 12%. Return on equity is very solid at 20%. The payout ratio, some brokers have it at like 20-25. Macquarie's estimating they're going to have a 40% payout ratio. Nonetheless, it's less than 50. They're retaining a lot of their earnings. Flight Centre is Australia's largest travel agent. There's a lot of uncertainty around last week's announcement. However, they've had shocking announcements previously and the stock has always bounced back. The track record is of growth. I rated a buy. Most brokers like them, so do I. I think this sell-off is an opportunity, not a reason to sell it. As always, if you want to learn more about anything I covered today, or you have a couple suggestions of things you want me to cover, I'm happy to receive an email from you. Send it to stockwatch@fnn.com.au and address it to me, Chris Pedersen. Have a wonderful week. Thank you for your time.